Vanguard has some of the most popular ETFs in existence, and in this video, I'm going through 6 top high-growth Vanguard ETFs that you can invest in today. There's currently 76 different ones to choose from, but these are my favorite 6 that invest in higher risk, higher reward companies. And yeah, if you didn't know, Vanguard is one of the top ETF providers with their super low expense ratios, so that's why I personally have a significant portion of my money with them. Let's get started. Number 1 on the list is the Vanguard Growth Index Fund ETF, stock ticker VUG. Right now, one share of VUG is trading at $250.78, which is basically the 52-week low, and the 52-week high is $325.66. So yeah, obviously a lot of these high growth ETFs as well as stocks are getting pummeled right now in the market. Vanguard lists VUG as a 4 on the risk potential scale, with 1 being less risk, less reward, and 5 being more risk, more reward. So I know the recent drops have been a little bit scary, but if you look at the hypothetical growth of $10,000 in the last 10 years, you can see that, it's grown a lot. It actually went as high as $50,000, which means that your money would have 5x'd in about 9 or 10 years. But, with the recent drops, that has gone down to under $40,000. So still about a 4x return in the last 10 years. So the fund has 266 different companies in it with a median market cap of $350.2 billion. The average price to earnings ratio is 33. The average price to book ratio is 9.7. And the return on equity is 29.1%. Here are the different sectors in this ETF. You can see that it's pretty heavy in consumer discretionary. It's big in healthcare, industrials, and biggest in technology at almost 50%. Here are the top 10 largest holdings. You can see they have, Apple, Microsoft, Alphabet, and these top 10 holdings make up 52% of the total net assets. A really awesome part about this ETF is that the expense ratio is only 0.04%. That's super small, and to put it into perspective, the fees on $10,000 invested over 10 years would be only $95. So yeah, as you guys saw, the Vanguard Growth Index Fund ETF tracks stocks in the CRSP US Large Cap Growth Index. So it tends to focus on larger, more durable companies with bullish trajectories. Think Apple, Microsoft, Amazon, Meta, Alphabet, Tesla, and many more well-established businesses out there. And the growth aspect of this ETF couldn't be clearer, right? Over the past 5 years, the fund's price has appreciated by well over 100%, meaning anyone who invested in this ETF 5 years ago has more than doubled their investment by now. Even more so if you had invested 10 years ago, which I did show you guys in the screen share. I personally think that this ETF is a solid pick because of its emphasis on tech companies. So if you want high growth but don't want to pick individual companies, this is a really good choice. Tech right now is of course down significantly in the last few months, but long-term wise, I think a lot of these companies have a ton of room to grow. Of course, some of the big holdings in this fund are commonly found in many of the largest and most successful ETFs anyways, but what makes VUG special is its massive size, its low fees, and liquidity, which gives investors more flexibility to get in and out of their investment. The larger size ETF is also generally more stable, which explains why VUG has been such a consistent powerhouse of investment for pretty much the entirety of its run in the market. If you're looking for a reliable, secure, but still exciting way to grow your money, then I think VUG should definitely be on your watch list. It's definitely one of the most popular high growth Vanguard ETFs out there. Second on the list is the Vanguard Russell 2000 ETF, stock ticker VTWO. Right now, one share of VTWO is trading at $75.58, which is basically the 52-week low, and the 52-week high is $97.99. This would be the growth of $10,000 in the last 10 years. So if you had started with $10,000 10 years ago, that would have grown to as much as over $30,000 at its peak. But yeah, since then it has dropped a good amount. This is rated a 5 on the risk potential scale. So that means more risk and more reward. It's considered a small blend portfolio. And you see that this fund has 2,032 stocks with a median market cap of $2.9 billion, a price to earnings ratio of 14.3, price to book ratio of 2.2, and a return on equity of 6.9%. The fund total net assets is $7.6 billion. And looking at the different sectors, you can see that this one's heavy in consumer discretionary at 13.6%, financials at 15.9%, healthcare at 16.1%, industrials at 15.4%, and technology at 12.3%. Here are the 10 largest holdings as of right now, which make up just 3.5% of total net assets. And looking at the fees, you can see that the expense ratio for this fund is 0.1%, which means that your fees on $10,000 invested over 10 10 years is $236, which is a bit more than the previous ETF we talked about, making this one of the higher ones on this list. So VTWO tracks small cap companies from the Russell 2000 index, which may interest some of the more risk tolerant viewers or investors here. High returns come with greater risk, and small cap companies can generate massive profits for shareholders. However, as you guys saw, the larger cap companies have performed better than small cap companies over the last decade, but on a case-to-case basis, small cap companies are higher risk, higher reward. Another interesting thing to note about VTWO is the fact that the fund's largest sector is healthcare, followed by financials and then tech. However, this makes sense because there are many medical companies out there that aren't too big, and it seems like VTWO aims to target those high risk, high reward businesses. What specifically makes this fund appealing to me is the fact that it is passively managed, meaning that it simply follows its respective market index. Passive management also implies lower costs, more transparency, and overall less complications, and these types of funds are typically solid long-term investments. If you guys are willing to incur greater risk by buying into small cap companies while still placing your money in a decent long-term investment, VTWO might be the perfect Vanguard ETF for you. As part of an overall portfolio, it can give you more diversity to your holding, because I do know that most people like to hold large cap stuff, but if you want to, actually introduce some more small cap stuff to your portfolio, then this one will do the trick. So I like hooking it up for my audience, so I actually got Webull to give you guys 5 free stocks worth up to $9,600 and $5 of free crypto when you use my link below and make your first deposit. If you've watched any of my videos, you'll know that Webull is one of my go-to investing apps that I personally use, and I've made a lot of money from them. They're a zero commission stock trading platform that makes investing easy and enjoyable. You can buy stocks, crypto, all the Vanguard ETFs on this list. You can trade options. The list is endless. And say, for example, you want to invest in Tesla, right? One share of Tesla stock is about $900, but with Webull, they'll allow you to actually buy partial shares, meaning you can buy, let's say, a tenth of a share for $90. Beyond that, they also have paper trading, which is great for learning, unlimited crypto trading, and also free full extended hours trading. You won't find that with many other platforms, which is why I love their app so much. Like I mentioned earlier, right now you'll get 5 free stocks when you sign up and deposit just 1 cent or more, plus make your first crypto trade and they'll send you $5 in free crypto. I definitely recommend using my unique link below to claim your free stocks and crypto. Again, the link is below to get those freebies today. And now back to the video. All right, number 3 on the list is the Vanguard S&P 500 ETF, stock ticker VOO. This is a really popular ETF that I am personally really heavily invested in. And it's also one of the most popular ETFs that people like talking about. So right now, 1 share of VOO is trading at $381.91. That's only about $9 higher than the 52-week low, and it's significantly lower than the 52-week high of $439.25. Here's the performance over the last 10 years. You can see that $10,000 would have turned into over $40,000. So yeah, historically, it's performed very, very well. It's ranked a 4 on the risk potential scale, and it's characterized as a large blend fund. This ETF has 506 different stocks in it with a median market cap of $207.4 billion. The average price to earnings ratio is 22.1. The average price to book ratio is 4.3. The return equity of this fund is 22.3%. And the fund total net assets is $841.7 billion. Its largest sectors are going to be in communication services at 9.4%, consumer discretionary at 12%, financials at 11%, healthcare at 13.6%, and information technology at 28%. Here are the 10 largest holdings. It's very, very similar to VUG. And these 10 largest holdings make up 30.4% of total net assets. The most awesome part about this fund is that the expense ratio is just 0.03%, making it extremely low and affordable to invest using this fund. This means that on $10,000 invested over 10 years, the fees of VOO would come out at $71 in total. So the Vanguard S&P 500 ETF tracks the S&P 500 index, which basically means that the fund tracks the broader market as a whole, because we can be very confident that the market will continue rising in value over the next 50 years or longer. VOO seems like a solid investment to hold onto forever. And like I mentioned earlier, it's actually the ETF that I have the most of in my own personal investing journey. And of course, the index being highly diversified with its sectors means that we don't have to worry too much about volatility and unpredictability of certain sectors taking our money. What I really love about VOO VOO is that if there's ever a slump in the market, the price history of this fund shows that it will be very good at recovering from these slumps, since of course the economy is also great at recovering. In particular, taking a look at the downward trend as a result of the pandemic, as well as the recovery afterwards, really underscores the durability of VOO as one of the best long-term investments on the market. I definitely think VOO is a worthy consideration for any investor who wants to store their money in a secure place and make money off of it for a long time. It's extremely passive, has a very low expense ratio, and is probably the most recommended ETF in the world. That's why this should definitely be on your watch list. Number 4 is the Vanguard Total Stock Market Index Fund, stock ticker VTI. Right now, one share of VTI is trading at $207.88, which is pretty much the 52-week low, and the 52-week high is $242.92. Here's the performance in the last 10 years. You can see that it's grown exceptionally well. And if you'd started out with $10,000 10 years ago, it would have grown to about $40,000 at the peak. But yeah, right now that $10,000 would have turned into about $34,000. It's rated a 4 on the risk potential scale and is characterized as a large blend portfolio fund. This ETF has 4,124 different stocks with a median market cap of $133.8 billion. The average price earnings ratio is 21.2, the price to book ratio is 3.9, and the return equity is 19.6%. The total net assets in this fund is $1.3 trillion. And looking at the sector diversification, we are heavy in consumer discretionary at 15.3%, financials at 11.3%, healthcare at 12.9%, industrials at 12.6%, and of course technology at 27.6%. Here are the 10 largest holdings, which make up 25.6% of total net assets. And taking a look at the fees, you can see that the expense ratio of VTI is 0.03%, which is amazing, meaning that fees on $10,000 invested over 10 years would just come out to be $71. Okay, so VOO tracks the performance of the CRSP US Total Market Index. This fund is perfect for investors who want to invest in the entire US market because the fund contains a diverse collection of investable US securities from small cap stocks to mid to large cap holdings. So yeah, while some of its largest holdings include obvious picks like Apple, Microsoft, and Tesla, the ETF could incur greater risk because of its incorporation of 4,000 other companies, including smaller, more volatile businesses. What I like most about VTI is that it really owns up to the mentality of buying as much of the market as possible. Whereas a Vanguard ETF like VOO focuses more on growth and tech, VTI emphasizes how buying the haystack is much easier than finding the needle in the haystack, without giving up too much profit or growth. I think this ETF appears to be a solid investment to hold for a long time because of its emphasis on the broader market and its value. It's basically like saying, hey, I want to buy a bit of every stock in the US, and to do that, I'm just going to buy VTI. Yeah, a really popular Vanguard ETF that I definitely recommend having on your watch list. Number 5 on the list is the Vanguard Total International Stock ETF, stock ticker VXUS. Right now, one share of VXUS is trading at $55.02, which is the 52-week low, and the 52-week high is $67.48. On first glance, it's pretty obvious that this international ETF has not grown as much as, our US large cap ETFs. And if you'd started with $10,000 10 years ago, that would have grown to about $20,000 at the peak, which is now about $16,500. So about a 60% return on your money over 10 years. Vanguard rates it as a 5 on the risk potential scale. And looking at the region allocation, you can see that 25.2% is in emerging markets, 39.5% is in Europe, 26.8% is in the Pacific, 0.5% in the Middle East, and 8% in North America. There are a total of 7,896 different companies in this ETF with a median market cap of $32.7 billion. The average price to earnings ratio is 12.9, the average price to book ratio is 1.7, and the average return equity is 12.4%. The fund total net assets are at $386.7 billion. And if we take a look at the 10 largest holdings, you can see that number 1 on the list is Taiwan Semiconductor Manufacturing Co., followed by Nestle and Samsung. A lot of companies that you guys have heard of, but are not based in the United States. And yeah, these 10 largest holdings make up 9.2% of total net assets. Here's the market allocation in terms of the country. So we can see that Japan leads the list, followed by the UK and Canada, and then China. And then finally, looking at the fees, you can see that the expense ratio of this fund is 0.07%. So not the cheapest, but also not the most expensive. This means that fees on $10,000 invested over 10 years would give you a fee of $165 total. So yeah, in summary, VXUS tracks the performance of the FTSE Global all cap X US index, which basically means that VXUS exposes investors to international stock. Crazy, right? There are tons of super great companies that you can invest in that are outside the US. Being more exposed to countries that you might not be familiar with does carry some intrinsic risk. But yeah, this fund is really well suited for higher risk investors that don't want to, only invest in the US economy. However, one can also look at this in a more positive light by arguing that international markets can counteract a bearish run for the US market, making this fund an appealing choice for those who want to capitalize on the growth of the global market as a whole. For the investors that want to have a piece of the massive pie that is the global stock market, I personally feel like it would be wise to invest both in VXUS and VTI, which, like we talked about, is the fund that tracks the US stock market as a whole. That way you can really maximize your exposure to the US market, which I really do believe in the long term, as well as the international markets that also have a lot of potential to grow. Yes, it definitely has not grown as much in the last 10 years as some of the US ETFs. But yeah, VXUS can be a really great way to actually start diversifying your portfolio and introducing international companies. All right, number 6 on the list is the Vanguard High Dividend Yield Index Fund, stock ticker VYM. This is not a traditionally high growth ETF in terms of the actual price of the ETF, but if you take into account the high dividend yield that this one pays out, I do think it is a very great choice for a lot of people watching this video. So right now, one share of VYM is trading at $109.29 with a 52-week low of $102.28 and a 52-week high of $114.97. So as you can see, very little price movement for this ETF, which is pretty typical for these types of high dividend companies. See that the dividend yield for this one is 2.77%, which is significantly higher than the other ETFs we talked about in this video. It's rated as a 4 on the risk potential scale and is characterized as a large value portfolio. We have a total of 445 different stocks in this fund, a median market cap of $145.6 billion, an average price to earnings ratio of 15.4, price to book ratio of 2.6, and average return equity of 15.2%. The fund total net assets comes in at $57.4 billion. If we look at the different sectors, we can see that this one's heavy in consumer discretionary, consumer staples at 12.4%, energy at 8.8%, financials at 20.9%, healthcare at 13.9%, and industrials at 10.2%. But yeah, this one is pretty well spread out compared to some of the other ETFs we talked about. Here are the 10 largest holdings in VYM, and they make up 22.3% of total net assets. Come over here to the fees. You can see that the expense ratio for VYM is at 0.06%, which, like before, is not the lowest, but also not the highest. $10,000 invested over 10 years would give you total fees of $142, which is significantly lower than the category average. So VYM is a fund that tracks the FTSE High Dividend Yield Index. So they're basically monitoring the performance of companies that pay out high dividends to their shareholders. This is already a solid pool investments, because typically companies that can afford to pay out high dividends to their investors already have a large pool of cash as well as plenty of assets to reinvest in themselves. This is why VYM is a good option for investors seeking low volatility and sustainable returns. With top stock holdings including JP Morgan Chase, Johnson & Johnson, and the Home Depot, I personally feel pretty confident in VYM's ability to generate favorable returns in a steady manner. It's one of the biggest dividend assets on the market, and I think it is a great way for investors to expose themselves to durable blue chip companies who can afford to pay out hefty dividends to their shareholders. So instead of holding individual high dividend companies and risk some of them falling in value or cutting their dividend payouts, you can invest in a diverse group of well-paying companies to mitigate risk. Personally, just like the international ETF we talked about, as well as this ETF, I think these should not be a majority of your portfolio. Rather, if you believe in the US economy as a whole, you should invest in things like VOO, VTI, VUG, and supplement your portfolio with with ETFs like this. It's a great way to hold these high dividend companies without having to, individually track them. Anyways, those are 6 top high growth Vanguard ETFs that you guys can invest in today. If you guys want to get some free stocks in crypto, I will put links down below. As a reminder, Webull is hooking it up for you guys with their free promotions. And yeah, overall, I just love Vanguard so much. They are a great company with lots of really high quality funds, which definitely make investing really, really easy. I just wanted to make this video to share with you guys some of the most popular Vanguard ETFs that you guys can invest in, which is very, very passive and means that you can actually focus your time on building your business, making more money, and not being too preoccupied with the stresses of, picking individual stocks. I hope you guys enjoyed the video, and if you did, make sure to share it with a friend, and also like and subscribe for more videos just like this. I make a ton of content about personal finance, investing, and entrepreneurship. Again, thank you so much for your time, and I'll see you in the next video. Peace.